If you've just joined us, welcome to the Accountant's Guide to Managing Scope Creep. I'm going to go ahead and welcome your moderator, Ketty Waller, into the conversation. Ketty is the Head of Public Practice and SME at CPA Australia. Ketty, I've just opened up your mic. Welcome.
Thank you. Welcome everyone to today's webinar, The Accountant's Guide to Managing Scope Creep. As Linda mentioned, my name is Ketty Waller and I'm the Head of Public Practice and SME at CPA Australia. I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders, past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. It is now my pleasure to introduce our presenters for today's session. So welcome Ethan and Rebecca.
Thanks so much, Ketty. Great to be here and really appreciate the team at CPA Australia hosting the webinar today, and also Linda at Kahoot. Thanks for inviting us along.
Great. Over to you, Ethan and Rebecca. We look forward to the session.
Awesome. Thanks so much, Ketty. Welcome, everyone. It's really great to be speaking with you all today, and just wanted to take a minute to say a huge thank you to everyone who's taken the time out of their day to join us. It's unlikely that we'll go for the full hour, but I'd love for you to engage in the chat. Please ask questions and get amongst it in this time where we can't get together at networking events. Webinar chat boxes are almost the next best thing. So please feel free to get involved. Ask any questions. You've got direct access to myself and Rebecca for this next sort of 45 minutes or so. So I'd really love for you to share your experience and get involved. We're obviously going to be talking about scope creep today, and it was encouraging to see so many of you register for the session. We had several hundred members in public practice register for today's webinar, which is great. It's clearly an issue that is felt across the board within public practice across the globe. Frankly, we run this content globally, and we see accountants all over the place struggling with managing expectations and managing scope creep with their clients. So really pleased to introduce my fabulous co-host, Rebecca, today. For those of you who haven't met Rebecca before, she wears many different hats, one of those being a director at an accounting practice, but also helps out here at Practice Ignition as the head of accounting several days a week, and helps us to write content and ensure that our products solving the right problems for public practice members. And Beck, maybe just over to yourself to give a brief introduction on your experience and why you're here talking to everyone today.
Thanks so much, Ethan. You're right, I am an accountant. I've been doing this for about 20 years now, maybe a little bit longer. I've been saying 20 years for a couple of years now, I think. This is our first webinar together, I think, this year. We did quite a lot last year, and particularly near the end of 2021, we were getting lots of questions around scope creep. Even internally in our firm, we were suffering a lot from scope creep, primarily driven by, in recent years, all this extra COVID work and all the extra time and effort we're spending with our clients. Not to say that scope creep hasn't been a problem for years. I think right now, though, it's really front and center with clients, with accountants, while they're reviewing their WIP ledgers and just trying to figure out how to recover this work, not just now, but in the future. So I'm quite excited to go through this webinar today and share everything we've done to sort of stop this problem in our business.
Awesome. Thanks so much, Beck. And I think it's the second webinar we've done this year, but we did something like 50 or 60 last year, which was a little bit crazy. So excellent. And for those of you who aren't familiar with Practice Ignition, we are a software provider specifically to accountants. We've been in operation for about 8 or 9 years now, and we've recently partnered with CPA to provide some benefit to members around engagement letters and managing this whole issue of scope creep for firms as well. So we'll be talking about that later on in the session. So just to run through some of the learning objectives from today, we will be talking a lot about how you can, I guess, make more money is probably the wrong word to use within this agenda, but how you can increase your fees, how you can actually get properly paid for all the value that you're delivering to your clients. That involves managing scope creep, setting expectations, taking control of client relationships. Beck's got some fantastic insight from her experience in practice doing this, and how to leverage technology to then stay compliant and improve your client's experience at the same time. We're also going to touch, and it can be a little bit of a can of worms, but we're going to touch on pricing and scoping for special projects as well, given the volume of work that accountants have been undertaking over the last few years. We've heard nothing but you're busy and slammed and you've got too much on your plate. And so we're just going to take a few minutes at the end to talk a little bit about pricing. I'd love for all of you to get involved in the chat and share your experience as we go along. So firstly, a little bit of an intro on scope creep. I'm sure everyone is familiar with what this term means and what it is within your practice. I've said why it's killing your practice in here. It's a little bit dramatic, but we're going to talk about why it's important and then what we can do to address that through several different strategies. So Beck, I guess throw it over to you for this point. I mean, I'd love to get just a flashback to, your 20 something years in practice. Take us through the journey, I guess, on how your firm has approached this over the last couple of years and what that's looked like for you guys. Because obviously we're all in agreement that scope creep happens when we do work for clients that we're not formally engaged for. That's kind of a common understanding. But if you could share with us some of the other ways that scope creep kind of enters the practice and has a negative impact on our client relationships, we'd love to hear it.
Yeah, scope creep is lots of different things to an accounting practice. It can be that service that, as you mentioned, we're not engaged for. So we could have an engagement letter that's great and detailed, lists out all the services we provide, and then a client reaches out and they need an interim review or some tax planning or a cash flow statement for a bank loan. All of these things that maybe we didn't plan for. So they're not in our engagement letter, but we jump in and we do it because as accountants, it's what we do. We come to the rescue. We're the people there to help businesses sort out what they need to make sure that they stay afloat and functioning. And we do the work, and particularly in firms that are still using timesheets, which we do, even though we're fixed fee, you track the time against the client. Then you get to the point of the year where you're looking at your WIP and you're wondering, why is my WIP blowing out? Why am I spending all this time and effort doing work and I'm not getting paid? Why does my team seem exhausted and totally at capacity, but my fees haven't increased? What's going on? So it's all these little bits here and there that we're giving away to our clients and aren't capturing properly, usually because we don't have really great terms of engagement in the first place, or we don't have a method of tracking and updating that during the year to make sure that we are engaging our clients for all that work. Now, I know that we could go in and send our clients bills anyway, even if we're not engaged, and just cross our fingers and hope they pay. But really what we're trying to have here is to make sure that the clients are aware in advance of work that we're doing, or we have a method to make sure that there's no fighting or any sort of disgruntlement with our clients when we send them an invoice they weren't expecting. So any times we either do work that we weren't anticipating, or the client receives a bill for work that they weren't anticipating, all of that is scope creep, and it all needs a better way to be managed.
Yeah, absolutely. And look, I think the key thing here that we want to highlight is that scope creep quite often can occur with things that are out of our control as well. So as you mentioned, Beck, it's not just when you voluntarily go ahead and undertake additional services without charging in the interest of helping your clients, but we think a primary reason for scope creep is the lack of setting expectations properly with clients at the outset. And so whether that's jumping into a set of books where the data is not clean and you've got to spend all this time doing recovery and rescue work, you're waiting on the client to send you the right information. It's taking weeks to get that from them. It's meant that your job turnaround time has completely blown out. You're not able to get things back to them in a timely manner. Then puts your team under stress, everyone under stress. Client circumstances change without them notifying you, or they notify you at the last minute as well. These are all things that are sort of out of our control that can impact scope creep, but can be fixed by properly setting client expectations at the start of the relationship. And so I guess the impact here, I'd love to hear, Beck, now that you've put in place these processes within your practice and kind of gone through this journey, what's been the benefit that you've seen within your practice and then across your peers within public practice as well? Quite just to share from our experience with our customers, we've seen firms grow in a rapid way over the last couple of years, talking 20, 30% year on year, just because they have A, properly engaged for all this extra work they're doing their clients, and B, been able to pay their staff properly because they're getting that revenue back into the business, and then retain and attract the right accountants so that they can continue to grow. And we know that capacity is obviously a big issue at the moment as well, but love to hear this from yourself, Beck, on what's been the impact for your firm.
Yeah, the biggest impact when you actually manage the scope creep issue in a firm and have a better engagement, more robust process around all of that is that money just drops straight to your bottom line, because we're already doing this work. We're just not charging for it. We're not charging appropriately for it. And if it's a scope creep item that we didn't agree on a fee with our clients up front for this work, more than likely that fee is the fee that will be disputed or might not get paid or would be a bad debt. So we're really eliminating all of those items and all of that frustration to increase getting paid in our business what we're worth for work we're already doing. So you can have an increase in your top line without increasing any of your costs, which is huge for any business, but particularly an accounting business where it's all really driven by labor. So that's been absolutely fantastic. We've also been able to use the process to really identify the kind of clients we want to work with, because they'll be on board with our new process, which we'll go through in some more detail during the webinar. But any of the clients that don't want to work with us the way that we want to work with them means that we're not on the same page. So now we really just work with great clients, which makes everybody in the team happier.
Yeah, and I love that point there, written off work leads, disengaged staff. I mean, I think that's something that you guys do really well in terms of training your team to get really clear on exactly what it is this client is paying for. What are the expectations? When are we going to deliver this work? In what manner are we going to deliver this work? And if they call up and ask to pick your brain, or if they ask for something that's out of that original scope, totally feel comfortable sending them a new engagement. And something you've shared before, which I think is really cool, is that your clients now expect that when they're calling you to ask for advice, that you will be sending them an updated engagement. And we're going to talk a little bit about obligations in a few minutes as well. But I mean, the vast majority of firms that we work with and who adopt practice ignition are not doing this on a regular basis. The guidance from the Tax Practitioners Board, from all the other relevant bodies, from APSB, it all recommends doing this on an annual basis, but people just aren't doing it. And so we want to talk a little bit about what's been stopping us. Like, where are the gaps in this process? Why aren't firms staying up to date? It is a little bit of a pain in the butt to kind of manually update a Word or PDF document and resend that out to your clients. But Beck, I mean, what was your previous process in managing this engagements thing? Because clearly, you haven't been on top of it, all the time. So why do you think that firms aren't staying on top of this process with their clients?
I'm almost embarrassed to admit the old processes, but I think like everybody, we get a little bit busy in our world, and particularly with all the work that we've got to do. So we were not updating our engagements every year. We would, if we were engaging, it would usually just happen at the beginning of a relationship with a client, sign them up, get them to sign an engagement letter. The engagement letters were very, very generic. They didn't spell out exactly what the services were, who they were being provided to, and how often they were being provided. So they could be quite ambiguous with what was happening. Because they were old and they were stored in a non-central location, it was hard for us to access them to confirm really quickly what was going on with the client and what work we were actually doing. It was particularly difficult for the team to find the engagements, and that meant that they would just jump in and do work without double checking whether or not we were even going to get paid for it. And I think one of the biggest things as well is our engagement letters weren't being kept up to date because we were not updating our template regularly. We were relying on an old, outdated template that was not industry specific and not approved by a reporting body either. So that's really, that was really confronting when I actually sat down and like, oh, this process needs to change.
Absolutely. Craig's asked a fantastic question in the chat there. Have you noticed a difference between the amount of scope creep for startups versus established practices? And I think the question behind that is like, clearly it's easier when you're starting a new business and working with new clients to set expectations up front. But how on earth do you go about resetting expectations with old clients is the real question. Like, what are some of the barriers there, and how did you go about shifting this sort of relationship with some of your longer term clients, Beck?
Well, it was actually a little bit sneaky, if I'm going to be really honest. On the upside, all the bodies that we have to report to and that control what it is that we have to do in our standards update things like engagement letters and our rules quite regularly. And particularly in the last couple of years, as the way that accountants deliver services have changed, what we're supposed to include in our engagement letters has changed. So we really just relied back on the fact that, well, we're being told we have to re-engage you, so this is why we have to do it. The tax agent board has said we have to do annual engagements, so we are now complying with what they said, and you'll get one every year. So it was a bit of that, blame game shifted over somewhere else, so there's no anger coming, particularly to the firm. and they weren't confused about why we're changing processes. We just really, you know, almost put the blame on the environment that we're in.
Right. Put the blame on CPA Australia.
That's right.
Just
Whatever
kidding.
works.
That's right. No, and this is a really good point that leads into what our obligations around engagement letters, and I'm just going to ask Ketty's sort of input on this in a minute as well. But I mean, there are a number of different resources that are out there, APS 305 and the tax practitioner's note around letters of engagement. We would recommend going and reading all of those. They're really useful resources and written in plain English. But I mean, Ketty, I'd love just to hear from your perspective, you know, working with public practice members at CPA Australia, like what is the importance, or how do you guys view the importance of engagement letters in terms of managing, you know, scope with clients and I guess mitigating risk in terms of even PII claims and all that sort of stuff? I'd love to hear your insight on this.
Thanks, Ethan. Yeah, it's a really great point, and thanks for the opportunity to comment. I think exactly to your point, there's absolute professional obligations, there's regulatory obligations to be doing terms of engagement. We know it's important from a client experience to be clear what you're going to be delivering. If there's any disputes or conversations that come up, you can be very clear about what's in and out. But exactly to that reference you just made, it's when you get to a PI claim, and that's when it's really important. What we often see with the PI claims coming through is that there is either no terms of engagement, there's a very poorly defined terms of engagement, or it's not clear what is actually in or out of scope for the engagement. And when you don't have that clarity in that documentation to actually evidence what you actually had committed to doing for the client, that's when it's a real challenge for the practitioner to be able to defend that PI claim, and that's the issue. So absolutely, it's great from a client experience. It's really good because you want to value your services, but it's a really important mechanism to help protect you should you unfortunately get in a position of dispute or a claim.
Yeah, absolutely. Thanks, Ketty. And we've heard that sort of even in the content, the webinars we've run with the board as well. It's the first port of call that they go to when resolving a dispute or resolving a claim. It's going straight to the terms of engagement. Even the updates recently that CPA released around their engagement letter template. You know, there are things like provisions for using cloud computing, confidentiality, outsourcing, all this sort of stuff that, you know, this changes every year. Like if you've implemented a new system or piece of tech within your firm, that privacy policy to that piece of technology should be included within your terms of engagement, because as you're using more and more cloud software, there is more and more risk of data breaches. You know, cross fingers that never happens, but it is a real risk and you need to be covered within your terms of engagement when it comes to that. Beck, anything else to add on that front?
No, I think you really covered it quite well, but it is, it can be confronting if you're not looking at this all the time when you actually sit down and address and have a look at your current engagement letter versus what is the standard out there, what's the template CPA is putting out, and you'll see potentially lots of holes because they do change every year. So for no other reason other than staying compliant, absolutely change your process, get that template and update every single year.
And Rebecca, just to add to that, we've actually included version control in our templates now. So if you are using a Word document as the way of doing that, you can use that version control to see what's changing. So to Ethan's point, and your point earlier, the environment in which you're operating is not stagnant. It is changing all the time. And something we're seeing coming through now is around the consumer data rights. So as part of open banking, there's going to be more obligations around information flow, and we're updating that information for members at the moment. But that's something else we're checking advice on. Do we need to put some statements regarding CDR into these teams of engagements too?
Yeah, thanks, Ketty. That's great. And even I've just written a note there as well. The ATO just released some updated guidance around client verification as well at the point of engagement, and that's going to become mandatory at some point in the back end of this year, we believe, according to what they've released so far. And so even having some of those terms and expectations and in terms of citing client identification and getting that sign off is going to become increasingly more important, which we see, you know, over in the UK, New Zealand and so on, but it's inevitable that it will be moving that way for us in Australia as well. So I guess the key thing here that we wanted to highlight is that the guidance is consistent across all of those sources, that we should be engaging at least annually with our clients. And Beck, you know, just from your perspective, what's the cadence and how do you engage with how do you set up that sort of engagement cadence? Is it just on an annual basis, or do you try and do it more than once a year, or what does that whole thing look like?
We do it at a minimum once a year. So we have particularly for business clients, we will actually run their re-engagement during the traditional tax planning season in Australia. So that, that last quarter of a financial year, we will look at our client, what's going on with them. It's a fantastic time to re-engage with your client, understand what's going on with their business. It's probably the time that we will pick up on anything that's changed as well. Or you might implement a new structure or do something with your client. Perfect opportunity to re-engage for the next 12 months. And that's when we would do most of them. And we'll do any of our client work. There are individual tax returns, for example. We'll do that either at the end of June, early July. And then we just keep an eye on it because we have a central location now where all of our engagement letters are kept. It's quite easy for anybody in the team to just jump in, double check the engagement at any point during the year and send out a new one if we need to update something with the client. It's also been great with all of the software out there in the ecosystem changing their pricing, going in and doing a bulk update with our re-engagements and sending out anything that's new. If we own our client subscriptions and we need to change their pricing, we make sure we have them sign off before we do that.
Awesome. Yes, we love when Xero do a price increase. Talking about setting expectations now and taking control of client relationships. I mean, this is kind of the thing which sits behind the engagement letters. So obviously we've talked about the importance of a robust engagement process in setting up those client expectations. I just want to highlight in on that second point there as well and get your insight here, Beck, in terms of fees. It's something we see commonly from firms who are looking at practice ignition. They're quite nervous about including fees up front in the conversation. They're nervous about putting fees in the engagement letter. We've seen a lot of practices kind of outline, the hourly rates for your managers and partners and directors and junior and senior accountants and so on. I mean, that's fine. A lot of practices are still continuing to do that. And we're not saying that you need to move to a fixed fee billing arrangement with clients. But if you could share some of the benefits that you found from just including fees up front in that conversation, that'd be great.
Clients are far less hesitant to agree to work when they know how much they're going to be charged for it. We live in an environment now where everybody knows what something's going to cost before you dive into it. Before the plumber turns up to your house to have a look at your plumbing issues or whatever happens in our world now, we know what things are going to cost. The world generally has moved to this fixed fee position. And by doing that, we get quicker sign off, we can jump in, we understand what's going on quickly with our clients as well, and we can get started on work. But it also means that there's no dispute at the end because they understood how much we were going to charge, and that doesn't change. And it doesn't change so long as the service and the scope of what we're providing doesn't change. So we haven't locked ourselves in completely that if we see a job, particularly a new client or even an existing client, and we get halfway through and realize, wow, they had, 50 extra asset finance purchases and all these extra bank accounts, and they haven't reconciled their accounts properly, and there's this GST. If we notice all of these issues in the job, we have in our terms and conditions the ability to pause and re-engage and change our fee at that point before going any further. And that's what we will absolutely do. And we try to check those things as early on in a job so that if we do need to change our scope or our fee, we can do that quickly and move on with the work.
Yeah, we're seeing a lot of firms even request or mandate read-only access to the file prior to quoting for the job anyway, which can sort of help frame up that pricing conversation. One other thing that we've seen just in market, and again, Beck, feel free to weigh in here with your experience, but everyone in terms of being fearful of losing the client potentially or having a negative experience talking about fees with clients. I mean, every accountant is busy at the moment. So the reality of them going down the road to find someone who's going to do it cheaper and faster is slim, for one. But secondly, I think we've seen a real impact from getting clear on, hey, this is what we offer. We offer it at this price, and we do that so that we can provide the best service to you as a client. And within that, you get X, Y, and Z. Like there are so many templates and scripts and resources out there that practices can use to really firm up that pricing conversation. And I think there are many other ways to differentiate yourself rather than just on price as well, Beck. And I know you guys have a minimum fee, and I think that's great because, as an example, I'm sure, you wouldn't mind me saying, like, I contacted Business Depot and said, hey, I'm looking to get some advice around these areas. Hey, here's the minimum fee. This is what we offer. I thought, oh, it's probably actually not what I need right now. I went and found a different service. And that's a great example of, like, for one, I'm not going to be annoying Beck and her accountants with all my silly questions. But secondly, it does attract the clients that you do want to work with, and there are plenty of them out there. Anything to add on that, Beck, before we move on to the next?
I think the most important thing here is just to remember that you don't need to feel pressured to negotiate on your fees. They're your fees. It's what you've set. You understand the service that you deliver and what you need to produce to cover your costs, pay your staff, and have a functioning workplace. There are more than enough clients out there for everybody. That's the reality of the situation and will be for many years. So if you're offering a good service, feel very comfortable in what it is that you're going to charge with your clients. Every time I've negotiated, I have lived to regret it, and I will not do it anymore. Even for you, Ethan.
Fantastic. I love that. Talking about retraining clients now, and we've discussed this a little bit, so I won't linger too long here. But I guess the key thing is that we want to be conveying the value of the service that we're providing to clients, not just tying it to an hourly rate. So if you complete the job within 10 minutes, that's great. That's not taking into account the 10 years of experience that you've had, which allows you to quickly identify and complete that work so quickly. So I think that it's really important to be bringing clients along on this journey. And as Craig's earlier point within the chat, this is far easier if you're starting a new practice and working with new clients, but potentially a little bit harder with existing clients. But as we heard, you can always blame it on your environment to have those conversations. Beck, you mentioned you're using Practice Ignition for one, which is great, but I'd love to hear the impact on your team from putting in place this process around engagements. And I guess the bottleneck that we see for a lot of firms that we work with is that all the decisions run through the partners all the time around what we're going to charge the client. Tell us a little bit more about how you've distributed that across your accounting team.
We invested the time to have a look at what the services were that we offer and the parameters around how we offer those services, how regularly they get offered, and what the different charge out rates are depending on what those services are and what size the business is and the types of entities. So we have this pricing matrix that we've effectively developed that the team has access to and that sits inside Practice Ignition. So if one of the team is approached at any level of the organization, they can draft an engagement based on whatever we have templated. And we have full engagements templated for probably 70 to 80% of the circumstances in which we work with clients. We know what we do, we know how we work with clients and what we're offering. So being able to template that out means that most of the work gets to go out without having to have, well, not work, sorry, most of those engagements can go out without having to chew up a lot of a partner's time checking that it's correct and in line with conversations, because we're all on the same page all the time.
Yeah, that's fantastic. And we've got a great question around engagement brochures as well, which I was keen to ask your opinion on, Beck, and maybe this is a good point of engagement for those of you who are listening. But I mean, what in terms of just sending out a brochure to all of your clients, is that something that you've done before, Beck? Is that something that you think is still appropriate in this day and age? Because from my understanding and reading the guidance, a brochure without getting sign-off from the clients and the individual entities that you're doing the work for is actually not enough to stay compliant.
Yeah, so there's nothing that specifically tells us we can't send a brochure, but the problem is being able to actually prove that the client has read it and signed off on it and kept record of that process is so much harder with a brochure. Even with the cover email, I think you've written here, Peter, says receipt of the email sending us your work for next year's acceptance of the terms. We've gone down that path as well a very, very long time ago and had some problems that would arise out of that, particularly when we got to then the fee that was charged, because they haven't actually necessarily agreed to that fee, because we don't include the fee in the brochure. So if we send out a brochure with an engagement, they bring the work in and they have 5 extra rental properties this year or something we weren't expecting, we charge them a lot more. There's no sign off there. There's no agreement by either party on how much that's going to cost. And the time involved in having to then chase them or deal with that dispute has never been worth it at the end of the day, when compared with the ability to just send out a quick customized engagement letter for the client's actual circumstances.
Yeah, awesome. This is great engagement. Thanks, Peter. Now, one thing here you've written back, this was your own slide, don't break your own rules. So you've obviously seen this happen in the past.
Yes.
Partners, directors breaking these rules. How have you kept that consistent within your firm?
It's always me that does it, and it's always me that lives to regret it. So that's why this slide is here. When you put the rules in place, it's probably going to be a lot easier for your team to follow the rules because that's a direction that's coming down to them. It is an easier process than probably what they're living by at the moment, and they'll welcome the change. But it's always anybody who has that high level of interaction with a client or a buddy who wants a favor. Every time we break the rules, it lets down the whole entire team. If we don't send the engagement, our team doesn't know what it is that they're supposed to be doing. They don't understand their expectations. Their frustration levels will get higher. If it does blow out and you just decide to send that extra big bill to the person that you were doing the favor for, the chances of getting paid are now no longer up there at 100%. They drop rapidly every time you increase your fee or the longer that this situation goes on. And then you have to send your friends to the debt collectors, and no one wants to do that.
That's right. But Beck, you're happy to help me with my cryptocurrency trading that I've been dabbling in over the last year. Yeah, great. Okay. Awesome. So what are the results? I mean, the 4 key things we've seen, and again, this is what Beck's written in terms of the benefits for her practice, but de-risking the business, removing the risk of performing work without written consent and approval. Obviously, that compliance risk is really something to consider as well, particularly with these incoming client verification standards, particularly as we're using more cloud-based software nowadays. You need to make sure that you're covered in your terms of engagement, or at least have links out to the privacy policies for each of the pieces of software that you use within your practice. That is critically important. Removing the risk of a client pushing back on the fees after you've already racked up all the time on the job. The team morale is something that's really interesting, particularly at the moment where everyone's struggling to find staff, struggling to find accountants, and struggling to find anyone really in most industries, from what we've seen. More cash and more profit as well. And then improved client relationships. I think this is the key, is that, you know, we can view this as something that's taking away from client relationships or just a tick box that we need to do before we get on with the work. But this can actually be part of your client. This can be part of your differentiator from the firm down the road. And I think a lot of practices from our experience and what we've seen are not doing this very well. So putting in place a really robust engagement process where you can showcase your value is an opportunity to differentiate yourself and provide an awesome client experience. Now, just on that, with the capacity issues that we've got at the moment across almost every practice that we speak to, there are technology solutions that are out there, such as Practice Ignition, which is why we're talking about this topic today. Surprise, surprise, that can sort of resolve for some of these issues. And so we've specifically developed a platform for accountants to stay on top of their client engagements. As a result of that, we've started to build out a lot more functionality around, we've noticed engagements are just beyond engagement letters. It's proposals, it's payments, it's having a single source of truth for your client records. Beck, you guys have used Practice Ignition for a number of years. What's been your experience in terms of that sort of transparency that it provides across your practice?
The clients love it, the team love it. The transparency becomes really important with the team because it helps them to assert their value and to understand what it is that they're doing in a really clear way. And it means right at the beginning, either at the beginning of a relationship or at the beginning of a re-engagement, now that we do them every year, the clients know where they stand and we know where we stand. So no one wastes any time. If they're not on board with the way that we want to work with them or how much we're going to charge, they have that opportunity straight away to find somebody else. And because we take payment details in most circumstances up front, we're not running that risk of not getting paid for the work once the fee's been set.
Awesome. And for those of you who have seen Practice Ignition in the past, we've made a number of changes over the last 12 months to vastly improve the flexibility around taking payments as well. So for not just engagements that are fixed fees, but for bill and completion, for hourly, estimate work, all that sort of stuff can now be included. One thing that we have done recently is partner with CPA Australia, and we have set up these partnerships globally to help people stay compliant. And what the benefit of this is you actually get access to CPAs engagement letter, if you're a member, of course, within the Practice Ignition platform. And that is automatically populated with all the client and the service and the pricing information when you create the proposal. And so it can literally take you between 3 and 5 minutes to create a proposal that has an up-to-date, relevant, customized engagement letter attached to it, which you can easily get sign off from your clients on. In addition to that, you're getting the benefit of having that single system of record where your team or yourself can quickly search a client and see exactly what's been agreed to and what's in scope. You get all the payments information in the same place, so you can see exactly where they're up to on their payments, and you get an up-to-date view on exactly what they've agreed to within the engagement as well. So we've really seen this partnership to be incredibly beneficial to members. We've seen a whole number of practices sign up as a result of this, and they're actively using the CPA engagement letter template within Practice Ignition, which is exciting. So we'll give you an opportunity to learn more about that later on. So moving into pricing, this is a really hot topic this year because prices for everything are going up across the board. I just drove past the fuel station this morning. It was over $2 a litre, which is always good to see. But Beck, I mean, I'd love to get your sort of overview here on how we can start figuring out what to charge, particularly for those who are looking to transition billing models. It all ties into this conversation of client engagement. And I think that just spending a little bit of time on going through your pricing methodology and how we present this to clients will be really beneficial. How do you guys approach this at Business Depot?
As I mentioned before, we have a client and service matrix approach. So all the services that we have are listed out in a matrix against what the client categorization is. So small client, medium client, large client. And then we've put some parameters around what makes somebody a small client, a medium client, or a large client. So then we can clearly identify and categorize the client and then figure out how much we're going to charge for the different services based on the recurrence of that service. Now, I know that sounds complicated, but once you go through the exercise once, it's actually really quite easy to keep up to date, and you'll find it really quite natural going through the process. We already know, we intrinsically know what we're doing for our clients and how much we're charging. We just need to carve out that time to sit down and document it properly. Now, when you're looking at it, that doesn't mean that this is set in stone forever. Absolutely, all the prices around us are increasing, and our prices to deliver services are also increasing. Staffing costs are going up, particularly in the more competitive market that we're now functioning in. Our software prices are increasing. Everything around us will be increasing. So raising our prices shouldn't be a big problem. And if you have your pricing in a matrix, you'll be able to sit down and do that quite quickly and have a look, whether it's on a percentage basis, whether you assess differently the different dollar value if you've had some time component driven towards what picked your pricing in the first place. But the key thing here is just understanding how much you're charging. This is also incredibly important for managing parts of scope creep. If you have a client that is traditionally a small client, as you've worked with them for years, you need to understand, and your team needs to understand, what will kick them into a medium client and know when you need to change your engagement, even if it's midway during a year or midway during a job. Just understanding what will make them stop and have to send a new engagement for a different price is incredibly key to managing your scope creep as well.
Yeah, interesting. And this is like a really hot topic at the moment, obviously, in the current environment that we're in. So I guess I wanted to spend a little bit of time, Beck, and firstly, I'm going to ask you a question about this categorization tool, and then second part to my question. But is this something you actually show your clients, the methodology for arriving at the price for their service? Because there's kind of two different schools of thought where you give your clients an Excel sheet to say, hey, this plus this plus this plus this is this, and if you want us to give you a discount, what would you like us to take out, kind of thing, or do you just present the final price and just put on your sales hat and do the pizzazz with it, and the clients just accept it? Like, what is your process for actually presenting it to clients?
It's a little bit of A, a little bit of B. So we don't show them the extent of our matrix to what would be on the screen and then the larger item. They don't see exactly what creates where they sit in what category. But when we give them an engagement, we don't have a final price at the bottom, and that's it. We actually split up every single service that we offer and what all those different services cost, because you might find that only one of those services becomes out of scope, not the whole entire job. So trying to explain why something went up $1,000 if you haven't clearly identified what part has gone up is difficult. And we did used to just have one big bulk price. We no longer do that. We also don't even do that with our monthly reoccurring services. So if our clients pay their whole entire annual fee divided by 12 each month, we still break up what all of those different items actually cost in case only one or two of them happens to change during the year. We've had much less pushback on increasing prices when we're clearer about what things are costing at the service level, not just the total fee.
Yep, fantastic. That's really helpful. So looking back over the last couple of years, you know, with all this work that everyone's had to do around COVID, thought we were going to get away with not saying that word through this webinar, but there it is. Beck, I mean, why is now more important than ever for firms to be considering this? And again, this all ties back into the theme of this webinar around scope creep, but we've seen accountants obviously busier than ever. We've started the year potentially on a little bit of a low from the conversations that I've been having. It's been a bit of a battle to get staff in the office, to get the work done. Clients are feeling stressed, there's deadlines, all that sort of stuff. I mean, you know, what role does pricing this out of scope work play in the broader sort of scope creep thing and with our client relationships?
If we focus on the COVID work that we did in the last couple of years, because it's easy for all of us to identify with at the moment, none of that was in any of our engagement letters going into the years. It doesn't matter whether you're engaged 10 years ago or you engage every year. This work was not included because we didn't know that it was going to happen until the government decided whether or not they were actually going to provide different grants and what that looked like. Now, all of that grant work, everything we did had their own individual terms and conditions. Everybody had different pricing. There was a different level of involvement, how involved accountants would get versus some other accountants in the actual application process. So we, because we were using Practice Ignition and we were able to template up services and a new engagement so quickly, we didn't do this work until we were engaged with our clients. And in this circumstance, there was no pushback, and I was not taking advantage of the situation, but they understood that we needed to make sure that we were protected, and they wanted to agree to the service and understand how much it was going to cost for us to help them with JobKeeper or whatever it happened to be at the time. So that really reinforced that process with my team and with our clients, that additional work is absolutely always going to get an engagement. And we have clients in the last few years that have ended up with 5, 6, 7 engagements, depending on what was going on. So they're used to the situation, they review them quickly, they electronically sign them quickly, and we get on with the work. But everybody in that circumstance is now covered, and that is incredibly important.
Absolutely. And in terms of moving or getting those payment details captured up front for this work, obviously you guys use Practice Ignition to do so, but I mean, have you found there to be any pushback around that? Like, again, it's something we hear all the time, is that, oh, my clients don't want to give payment details up front. Like, can't we just continue to invoice and wait for them to pay, despite the industry average debtor days being 50 plus? Is this something you get pushback from your clients on?
We do. It does happen. I would be lying if I sat here and said no one ever pushes back on this. And we have some rules around then how we will deal with that. If it is a small fee, particularly in an individual tax return, there's no negotiation. We will not negotiate whatsoever. They put in their payment details or they go elsewhere, because the last thing I want to do is chase a couple of $100. But we do lots of work with charities. We allow them to not put their details in, and also some listed entities. They have detailed authorization procedures they have to go through in their businesses or in the charity that means they can't put in payment details. We'll work with that, but if they do not pay within terms, then effectively we'll cut them off from future services. So we just had to get really tough with this, because we are a business as well. I need to manage my debtors, and I need to pay my staff and my rent and make profits, and payments make up a huge portion of that.
Yeah, last I heard, your debtors were well within terms anyway, which is a little humble brag. So I don't think you'd find too many accounting firms where that is the case. So that's great. So as we're rounding out the webinar today, I just wanted to recap. I mean, hopefully this has been helpful. Please jump in the chat and let us know your feedback on the content today. And I would love to get your insight and experience on client expectations and everything we've been talking about. But I mean, what we've seen broadly is that when you put in place a robust engagement process with your clients, that clear, defined scope of works for all clients leads to no overservicing or undercharging for jobs. The debtors are obviously impacted as a result of that. Clients are expecting a new proposal for any new work, and then a happier and engaged team. So in summary, those are the key benefits that we've seen when you put this kind of strategy and process in place in your practice. There are obviously so many things that go into scope creep, whether it be engagements or the whole sales process or your client engagement process. All of your processes within the practice will influence this, but we've tried to distill today a couple of the key strategies that we think have been effective, or from what our experience and from Beck's experience in practice, we've seen work with practices across the board. So hopefully it's been a useful bit of content today. I just want to reiterate that as a CPA member, you do get access to the CPA Australia engagement letter template within Practice Ignition. You can do that by signing up for a trial, and I'll give you a QR code, which you should all be familiar with nowadays, to go ahead and do that. If you would like access to that template, it is obviously still available from CPA Australia in the PDF format. But what we've been able to do is morph that into like a live automated engagement letter, which is automatically created based on all the client detail and the service detail that you put into the proposal, which we think is awesome. So in terms of your next steps, if you'd like to learn more about Practice Ignition from what you've heard today, jump into that link, or you've got two options. If you'd like to book a one-on-one overview with our team, our capacity is definitely filling up as we sort of approach the start of our end of financial year lead-in. So I'd encourage you to go ahead and do that, even if it means booking for a few weeks' time. Scan that code and book in if you're keen to learn more about the partnership and how it can benefit you guys. If you'd like to jump in and start a trial of Practice Ignition, feel free to use the second QR code there. We're not going to show your proof of vax or anything when you do this. Jump in and book in for your overview or your trial if that's something you're interested in. And we also have more information about the partnership on that landing page as well if you'd like to get started. But aside from that, and if there aren't any questions, we might look to hand it back over to Ketty or Linda to wrap up the session. Just wanted to say a huge thanks to you, Beck, for sharing your insight today, and to all of you who have taken the time out of your day to join the webinar. Really I hope it was useful for you. Thanks, Ketty.
Thanks, Ethan. And Beck, I've actually got two questions for you. One from the chat, which I'm not quite sure if we managed to cover off before, but there was a question asking, since you've actually implemented your sort of processes, have you actually found that you've had a reduction in scope creep when you're actually engaging your clients?
Absolutely. We cover off in as much detail as possible at the beginning of the engagement all the services we're offering, all the way down to how regularly we're going to do a BAS or have a look at their zero file, whatever it is. It's important to put not just the service, but the reoccurrence, so everybody understands where you stand in that world. And to make it easily accessible. That's what's been really great and changed the landscape for us using Practice Ignition, is it's easily accessible by my whole team. Everything's templated. So if they do find themselves in a position where they're asked to do additional work, or they're unsure if they're in scope, they can send a new engagement letter straight away, or they can check it straight away, and the client can check their end as well straight away. And once you do this often enough, the clients get trained. So our scope creep is now by choice, effectively. We only go out of scope at the moment if we make the decision to do that work for free for the clients, not as an accident down the road.
Yeah, I think it's a really great point. I think, a comment you made earlier is, don't undervalue your advice and service. We hear from members a lot about pricing and that being a topical sort of issue. But I think, to your point exactly, you've got to put a value on what you're actually providing, and experts for a reason. One of the other questions I was just thinking before, when you're talking about a lot of the stimulus, and we've had state-based, and I think it's today New South Wales are rolling out there, and previously announced relief around payroll. How have you worked with some of your clients who might have been impacted through some of these lockdowns and had issues with their cash flow, and still supporting them through that work and having the conversation around your terms of engagement?
Regardless of whether or not we made the decision to charge now or charge later, we still engaged our clients. And the reason why we did that is when I sat down and I looked at what was involved in these grants and what we're signing off, or our clients are signing off, there's a lot of responsibility being put out there. And all of these grants, they can be audited. And we've got clients going through those audits now, and knowing that we went to that extra effort to get everything signed off and put parts of those terms and conditions of the grants into our engagement letter to make sure our clients were really aware what was going on and to cover us, made me feel much more comfortable. And we absolutely had clients that could not pay us at the time. So we didn't charge at that time. We've delayed invoicing, or, you know, we've just supported them to make sure that they've gotten through and been able to stay a business and a client in the future. We still just had an engagement letter that signed off on that work so that we all knew where we stood.
Yeah, I think that is such a great tip, and I think it's so important to understand it's not just about doing the work to support the client, but the risk that it puts back to you. Because, you know, even though you look at the wording and it does talk about it not being an assurance or an audit engagement is based on the information provided, you still have an element of risk you're always exposed to that you need to consider. And again, that goes back to the value of your advice and services. It's a really great tip, and I really think that, you know, for members, regardless of the engagement, you always need to have that documented, because at the end of the day, it's going to protect you and the client. Even if your client's been one for 20 years, you know, it's that habit of getting in and renewing all the time and having that ongoing conversation. Look, I think today for everyone on our webinar, I think you would find and agree that this has been such a practical and relevant topic. And, you know, Becca's given really great insights in how to implement some of these things and the strategies into your business. And we've spoke about the importance of scope creep, not just in terms of the value to you, but protection, client experience, and ensuring ultimately that you guys are getting paid for what advice and services and the value that you're providing to your clients. So a sincere thank you from CPA to Beck and Ethan for today's webinar. I really hope everyone who's joined us today has enjoyed that. And with that, I'd like to hand back to Linda.
Thank you. I just wanted to take the opportunity to say a big thank you to our panel. So to Ethan, Beck and Kitty, thank you for a fantastic webinar. Special thanks to everyone as well for your attendance as well as for your participation today. That does formally conclude today's webinar, everyone. Now to exit, just go ahead and click on the cross on the bottom of your panel. Upon exiting, just letting you know you are redirected to a feedback form. You are initially taken to an external site message. Go ahead and click the blue continue button just to go through to the feedback form. It will only take you about 30 seconds to complete. However, it's really beneficial for CPA Australia as well as our panel, so please leave us your thoughts. As you can see in the chat box there, a lot of thank yous, so thank you very much, everyone. What I might do now is I'll pop on the music as you all exit. Thank you once again, and we hope to see you in another CPA Australia live webinar. Thanks, everyone. Bye-bye.
Thanks all.